Doot doot. That was my impression of a car. Anyway, in other news, how about you reduce your tax liabilities by running a company car? Watch this video as I show you how. So my name is Simon Mishevich, your Finance and Tax Director. I'm here solely to help you grow your wealth and reduce your tax liability. And in this video, we're going to be talking about cars as a business owner and getting a tax relief on it. Whichever method you are applying here in terms of your business, you can indeed claim the car cost against your income, which means that you are going to be reducing your taxable profits, which means you'd be paying less tax. So the first one is the actual method, which is the self-employed, which is the percentage rate that you can charge against your car costs in your business. Now I'm going to describe this with another video in a second. There is the other actual method in terms of owning a company, which you, the employee and the company director, has the use of a car which is paid for by the business. And then finally you've got the mileage allowance, which you can see there, the 45p for the first 10,000 miles and 25p thereafter. But we're going to start first with the actual method for self-employed. So if you are doing your personal self-assessment, you're not using a limited company, it does mean you could still claim the use of your car against your taxable income. So to describe that better, there is a video that has been really well put together by HMRC, but I'm going to take elements of their video just to highlight the key focus. So let's look at the first section of their video.
There are two ways of working out your motor expenses, either by using the actual costs method or a flat rate for business mileage. Whichever way you choose, you must continue to use it for that vehicle. If you use the actual costs method, you'll need to know how many miles the vehicle has done during the relevant tax year. Then work out what percentage of those were for business use only. For example, if the total running costs were £6,000 and 75% of the miles were for business use, you would include £4,500 on your self-assessment tax return.
Alright, so now you understand in terms of the percentage rates that you can apply against your income, or you can use rates. Now, did you notice that HMRC did not mention any rates at all in their video? I mean, let's be fair, it's a 2-minute video, they don't have much time. So what I'm going to do is show you those rates. Now, they didn't talk about the rates, and that's because they talked about the percentage of the car that you can offset against your income, but the rates are, which is on the right hand side, which is 45p per mile for the first 10,000 miles and then 25p thereafter. They didn't mention that in their video as far as I could tell. So that is the allowance. So you can either use the percentage or the mileage allowance. Now, if you use the mileage allowance, such as the 45p per mile, and you can really keep a track of where you're going, you may actually be able to benefit from that allowance more than the car percentage cost that you have. It depends on the value of the car versus the amount of miles that you do. So if you do a lot of miles and you've got a modest car, then maybe using the allowance, mileage allowance, is better than using the percentage terms. But you do have to do the maths, and then you have to stick with whichever one you want to pursue. Okay, the next one I want to talk about is the actual method, which is the company car. Now, the company car does give you a benefit in kind. So the company owns the car, whether it owns it outright or it has a lease, and more on that later on. And you, the employee or the director, has use of that car, but therefore it has a tax issue called a benefit in kind. And I'll talk about that in due course. But there are other things that you can have. So as a company, you can have the fuel cost against your taxable income, and you can claim capital allowances. And again, more on that. But first, I want you to have a look at HMRC's very own website, which I'm dropping a link just below here, and it talks about expenses, benefits, travel allowance of vehicles. Please do have a look at that. It is very useful. The link is below the video. And I've got something else called the capital allowances as well. Now, the link is below this. Now, I have to say to you, when you read in the capital allowances, like me, you could go through many pages and still get stuck in terms of what capital allowances are. So capital allowances is the car itself. You can take the cost of that car and over time you could write it off against your profit and loss account. Now, in most cars, in terms of the CO2 emissions, you get a different rate. So 6% is typical, which I think is going to be showing there. There we are. So you can get 6% on certain cars over this certain CO2 emissions. Now, if you have an electric car, there are ways of claiming 100% against your taxable income. So make sure that you speak to your accountant, because the couple of things for you, which is what I'm talking about here, is the benefits in kind. If you have a diesel car, you've got the cost as a benefits in kind charge to you for the use of the car, but you also have another charge which is for the fuel, which is the diesel to keep you going. So you've got really two charges to consider. Now, if you have an electric car, which is most beneficial for the environment, then you can indeed get just one charge, which is for the electric car itself. Now, fortuitously, that is minuscule, none in fact. But they are going to bring in the capital allowance, the usage percentage for using an electric car as a benefit in kind. But the zilch bit is the actual fuel. Because you're using electricity, you're not using fuel, therefore there is not a fuel scale charge at all. So it's a very powerful way to use an electric car to get the capital allowances to be written off against your profit and loss account and to reduce your own benefits in kind. So it's a win-win in many regards. But do speak to your accountant about this, because you're going to need to understand the type of car you have. And funny enough, HMRC do have a very nice tax calculator that has most cars in its library. You enter all the information into the car you want, and it will spew out information in terms of what the car cost is going to cost you as benefits in kind as an employee, which you will pay employees tax, and you will also have to pay an employer's national insurance at 13.8% as well, which could be quite significant. Now, when you've done your calculation, it will tell you what you as an employee will be charged in terms of tax and the employer. So it's a very good indicator. So do use that calculator. That calculator is below this video, so do take a look at that. Please don't go out there and buy a brand new car. As Robert Kiyosaki would say, that a car is a doodad. It doesn't add any value. It will not increase in value whatsoever. It does not generate an income. It is a doodad. It's a waste of time. So please do not think about buying your car. I would rather you take that money of buying a car which is depreciating as soon as you drive it off the forecourt and buy a rental property which you can generate an income from. So buy a house for investment, get a lease on a car which you can run around for 3 years and then just return it back. Now, again, you could put this through your company. You do need to get your accountant and tax advisor to discuss with you the pros and cons of putting a lease car inside of a limited company. But ultimately, what I'm trying to say here, though, is ultimately it is about reducing the car costs. Get a lease of a car, brand new car, every 3 years. Enjoy it, give it back, and get a new one. Go to Lease Your Next Car to look at the great deals that you can get for your next vehicle, and the link is below this video. So this is